Ever wondered how to supercharge your wealth beyond the confines of traditional banks? Well, today's your lucky day because we're diving deep into 7 powerful assets to grow your wealth outside banks. Yep, you heard it right. We're breaking free from the status quo and exploring some unconventional avenues to bolster your financial future. So what can you expect from this deep dive? We'll be uncovering the secrets behind precious metals, industrial commodities, safe haven currencies, and more. But here's the kicker, we won't just scratch the surface. Oh no, we're going full on Sherlock Holmes, dissecting each asset to reveal its hidden potential. But hey, don't take my word for it. Join the conversation, hit that subscribe button, and let's embark on this wealth-building journey together. And here's a little teaser for you. Which of these assets do you think holds the most promise for your portfolio? Drop your thoughts in the comments below, and let's get this started. All right. Let's dive into our first asset, precious metals. We're talking about gold, silver, and platinum. These metals have been valuable for centuries, not just because they're shiny and pretty, but because they have unique properties and a stable value that stands the test of time. Gold, in particular, has a fascinating history. Did you know that ancient civilizations used gold for currency, jewelry, and even as a status symbol? It's been a symbol of wealth and power for thousands of years. Unlike paper money, which can lose its value due to inflation, gold tends to hold its value well. This makes it a great hedge against economic downturns. As the famous investor Warren Buffett once said, "Gold is money, everything else is credit." That's pretty powerful, right? But how can you get a piece of the action? There are several ways to invest in precious metals, and I'll break them down for you. First up, you can buy physical gold or silver. This is the classic approach. You can purchase coins or bars and store them in a safe place. It's tangible, it's real, and you can actually hold it in your hand. But keep in mind, storing physical gold or silver requires security and insurance, which can add to the cost. If you're not into the idea of storing physical metals, you might want to consider ETFs or exchange-traded funds focused on precious metals. These are investment funds that trade on stock exchanges, much like stocks. When you invest in a precious metals ETF, you're essentially buying a share of a fund that holds physical gold, silver, or other precious metals. This way, you get exposure to the metals' prices without the hassle of storing them yourself. Another option is investing in the stocks of mining companies. These are companies that extract precious metals from the earth. For instance, Franco-Nevada Corporation is a well-known player in this space. When the price of gold goes up, these companies often see their stock prices rise as well, providing a nice return for investors. However, it's important to remember that mining stocks can be volatile and are influenced by more than just metal prices. Factors like management decisions, mining costs, and geopolitical events can all impact stock performance. For those who are tech-savvy and prefer the convenience of the digital world, there's also the option of digital gold investment platforms. These platforms allow you to buy and sell gold digitally. You own the gold, but it's stored securely by the platform, so you don't have to worry about physical storage. It's like having a digital wallet for your gold. This can be a great way to invest in gold if you're looking for flexibility and ease of access. Now, let's make things a bit more relatable. Think of investing in precious metals like having a sturdy umbrella. When the weather is calm, you might not think about it much. But when a storm hits, you'll be glad you have it. Similarly, during economic stability, precious metals might not seem as exciting. But during economic downturns, they can provide the financial protection you need. So precious metals like gold, silver, and platinum are time-tested investments. They offer stability and can serve as a hedge against inflation and economic uncertainty. Whether you choose to invest in physical metals, ETFs, mining stocks, or digital gold platforms, there are various ways to add these shiny assets to your portfolio. So, take some time to explore these options and consider how precious metals might fit into your wealth-building strategy. Now, let's dive into the fascinating world of industrial commodities, those unsung heroes that power our everyday lives without much fanfare. Picture this: your smartphone, your car, even the building you're in right now, all made possible by these essential materials. Take lithium, for example. It's not just another element. It's the secret sauce behind the rechargeable batteries in your gadgets and electric vehicles. Without it, your phone might not last past lunchtime, and your eco-friendly ride would be stuck in the driveway. But lithium isn't the only player in the game. We've got cobalt, nickel, and copper, each playing a vital role in various industries. Cobalt brings the bling to your smartphone's battery, while nickel adds a spark to stainless steel. And let's not forget about copper, the unsung hero of electrical wiring. Now you might be wondering, how can I get in on the action? Well, unless you're planning to dig up your backyard for copper, direct purchase might not be the most practical option. But fear not, there are other avenues to explore. For starters, you can invest in companies that specialize in mining and production. Think of them as the backbone of the industrial world, quietly churning out the raw materials that fuel our modern society. Companies like Mineral Resources Limited are at the forefront of this sector, mining essential commodities like lithium, nickel, and copper. And if you're not keen on picking individual stocks, there are commodity-focused ETFs and mutual funds that offer a diversified approach to industrial investments. These funds often invest in a basket of commodities, spreading your risk across different sectors and companies. So why should you care about industrial commodities? Well, besides their indispensable role in our daily lives, they also offer a unique investment opportunity. Unlike stocks or bonds, which can be influenced by market sentiment or government policies, commodities often march to the beat of their own drum. Just look at the recent price trends. While stocks were busy riding the roller coaster of market volatility, commodities like lithium and copper were quietly climbing to new heights. And with the rise of renewable energy and electric vehicles, the future looks brighter than ever for industrial commodities. But before you jump headfirst into the world of industrial investments, remember to do your homework. Research the market trends, understand the dynamics of supply and demand, and most importantly, diversify your portfolio to minimize risk. It's also crucial to keep an eye on global trends and geopolitical developments that could impact commodity prices. For example, increased demand for electric vehicles could drive up the prices of lithium and cobalt, while geopolitical tensions could disrupt the supply of nickel and copper. So whether you're a seasoned investor looking to diversify your portfolio or a curious newcomer eager to explore new horizons, industrial commodities offer a world of opportunities. From lithium-powered gadgets to copper-wired homes, these essential materials are the backbone of our modern world and potentially your ticket to financial success. Now let's talk about the fascinating world of safe haven currencies. When we talk about safe haven currencies, we're essentially referring to those currencies that investors flock to when the economic skies darken and uncertainty looms large. These currencies are like financial fortresses, offering shelter from the storm when other assets are buffeted by volatility. One prime example of a safe haven currency is the Swiss franc. This little powerhouse has earned itself quite the reputation for stability, especially during times of crisis. Picture this: while other currencies might be taking a beating, the Swiss franc stands strong like a rock, weathering the storm with ease. But what exactly makes these currencies so safe? Well, it boils down to a few key factors. First off, you've got political stability. Countries with stable governments tend to have currencies that are more resilient in times of trouble. Then there's the economy. Strong economic fundamentals can act as a shield against market volatility. Another factor to consider is investor sentiment. When things start to go south in the financial markets, investors often seek out safe haven assets as a way to protect their wealth. This surge in demand can drive up the value of safe haven currencies, making them even more attractive to investors. Now, you might be wondering, how can you get in on the action? Well, it's easier than you might think. There are currency exchange platforms and forex trading accounts that allow you to trade in safe haven currencies with just a few clicks. And if you prefer a hands-off approach, currency ETFs offer a hassle-free way to add some safe haven shine to your portfolio. But before you dive in head first, it's important to understand that no investment is without its risks. While safe haven currencies might be more stable than others, they're not immune to fluctuations. Economic shifts, geopolitical tensions, you name it, they can all impact currency values. So as with any investment, it's crucial to do your homework and diversify your portfolio. Don't put all your eggs in one currency basket, as they say. Spread your risk across different currencies and asset classes to help weather any storm that comes your way. Whether you're seeking refuge from market turbulence, hedging against geopolitical risk, or just looking to add a bit of stability to your portfolio, these currencies have got you covered. So why not dip your toes into the world of safe haven investing? Who knows? You might just find your financial safe harbor amidst the chaos of the markets. By the way, if you're enjoying the video so far and want more topics like this, comment the word "more" so I know. All right, let's dive into another powerful asset to grow your wealth outside banks. This time we're talking about government debt. Yeah, I know it might not sound as exciting as cryptocurrencies or real estate, but trust me, it's worth paying attention to. So what exactly is government debt? Well, think of it like this. When a government needs to borrow money, it issues bonds to investors. These bonds are essentially IOUs with a promise to pay back the principal plus interest over time. And guess what? You can be one of those investors, earning a steady stream of income in the form of interest payments. Now, you might be wondering, is investing in government debt really worth it? The answer: absolutely. U.S. Treasury bonds, for example, are considered one of the safest investments out there. With Uncle Sam's backing, you can sleep soundly knowing your money is in good hands. But hey, let's not overlook the other side of the coin. Not all government debt is created equal. Bonds from less stable economies come with their fair share of risks. That's why it's crucial to do your homework and diversify your bond portfolio. When you invest in government debt, you're essentially lending money to the government in exchange for regular interest payments. It's like being the bank instead of relying on one. And with the right strategy, government bonds can be a reliable source of income, helping you grow your wealth over time. Let's break it down further. Government bonds come in different flavors, from short-term treasury bills to long-term treasury bonds. Each type has its own maturity date and interest rate, catering to different investor preferences. So whether you're looking for quick returns or a steady income stream, there's a bond out there for you. Now, you might be wondering how to get started with government debt investing. Well, it's easier than you think. You can buy bonds directly through brokers or invest in bond-focused mutual funds and ETFs. These funds pool together money from multiple investors to buy a diversified portfolio of bonds, spreading out the risk. But wait, there's more. Did you know you can also invest in government debt from other countries? That's right, international bonds offer a way to diversify your portfolio and tap into global opportunities. Just remember to do your due diligence and consider factors like currency risk and geopolitical stability. Whether you're drawn to the glimmer of precious metals, the solidity of government debt, or the allure of cryptocurrencies, there's something for everyone in the world of alternative investments. Now let's dive into the world of real estate, where dreams are built and fortunes are made. You've probably heard the saying, land is the only thing that lasts. And there's some truth to that. Throughout history, investing in real estate has been a tried and true method of growing wealth. But why is it so appealing? Well, for starters, real estate offers multiple streams of income. Whether you're collecting rent from tenants or waiting for property values to appreciate, there's money to be made at every turn. Now, when it comes to real estate, it's not just about buying a house and calling it a day. There are different types of properties to consider, each with its own unique opportunities. You've got your residential properties. Think single-family homes, condos, and apartment buildings. These are great for generating rental income and are often considered a safer bet for first-time investors. Then there are commercial properties, office buildings, retail spaces, warehouses. While they may require a bigger upfront investment, the potential returns can be substantial. Just imagine leasing out space to businesses or charging premium rents in prime locations. But wait, there's more. Ever heard of real estate investment trusts, or REITs for short? These are like mutual funds for real estate, allowing you to invest in a diversified portfolio of properties without actually owning them outright. It's a hassle-free way to dip your toes into the real estate market without the headaches of being a landlord. Now, before you start shopping for your dream property, there are a few things to keep in mind. Location, for one, can make or break your investment. A property in a desirable neighborhood is more likely to appreciate in value over time. And speaking of value, it's essential to understand market trends and property valuations in your area. Doing your homework up front can save you from costly mistakes down the road. And let's not forget about property management. If you're not keen on handling tenant issues or dealing with maintenance requests at 2 a.m., hiring a property management company might be worth considering. Sure, it'll eat into your profits, but the peace of mind can be priceless. When it comes to financing your real estate investment, there are several options to consider. Traditional mortgages are a popular choice for buying residential properties, offering competitive interest rates and long repayment terms. If you're looking to invest in commercial real estate or need funds for renovations, commercial loans might be the way to go. And let's not forget about creative financing options like seller financing or crowdfunding platforms, which can provide alternative sources of capital. Whether you're drawn to residential properties, commercial spaces, or the simplicity of REITs, there's no shortage of opportunities to grow your wealth in the world of real estate. Just remember to do your due diligence, stay informed, and be prepared to roll with the punches. After all, in the game of real estate, patience and persistence often pay off in the long run. All right, let's dive into the fascinating world of cryptocurrencies. Picture this, a digital currency that operates independently of any central authority, like a bank or government. That's the essence of cryptocurrencies, powered by groundbreaking blockchain technology. Now you might be wondering, how can cryptocurrencies contribute to growing my wealth outside traditional banking? Well, let me enlighten you. Cryptocurrencies, led by the iconic Bitcoin, offer a unique proposition as a hedge against inflation and a diversification tool for your investment portfolio. Think of it this way. Just like gold and other precious metals, cryptocurrencies have a finite supply. With increasing demand and limited availability, they can serve as a store of value, preserving your purchasing power over time. In a world where central banks can print money at will, cryptocurrencies offer a refreshing alternative. However, it's important to acknowledge the elephant in the room: volatility. Cryptocurrency markets are notoriously volatile, with prices experiencing wild swings within short periods. While this volatility can lead to significant gains, it also comes with inherent risks. So, if you're considering investing in cryptocurrencies, buckle up and prepare for a roller coaster ride. Now let's talk about how you can get started in the world of cryptocurrencies. Platforms like Coinbase, Binance, and Kraken act as gateways, allowing you to buy, sell, and trade various cryptocurrencies with ease. Simply create an account, complete the verification process, link your bank account or debit credit card, and you're ready to embark on your crypto journey. But wait, there's more to consider. Security is paramount in the crypto world, as hackers are constantly devising new ways to exploit vulnerabilities. That's why it's essential to take proactive measures to safeguard your crypto assets. Enable two-factor authentication, use strong and unique passwords, and consider storing a portion of your holdings in hardware wallets for added security. Now, let's address the elephant in the room: regulation. The regulatory landscape surrounding cryptocurrencies varies from country to country and is subject to ongoing developments. While some governments embrace cryptocurrencies as a disruptive force for innovation, others approach them with caution, implementing stringent regulations to mitigate risks. So what's the bottom line? Cryptocurrencies can indeed be powerful assets to grow your wealth outside banks. With their potential for substantial returns and diversification benefits, they offer a compelling investment opportunity for those willing to navigate the inherent risks. But remember, guys, investing in cryptocurrencies requires careful consideration and due diligence. Educate yourself, stay informed about market trends and regulatory developments, and only invest what you can afford to lose. With prudence and patience, you can harness the potential of cryptocurrencies to bolster your financial future. All right, now let's explore the dynamic universe of peer-to-peer lending, a financial frontier where lenders meet borrowers and banks are left out of the equation. Picture this: you've got some extra cash burning a hole in your pocket and you're itching to put it to work. That's where peer-to-peer lending steps in, offering you a chance to earn solid returns on your investment while helping others achieve their financial goals. Now let's break it down. Peer-to-peer lending, or P2P lending for short, is essentially a matchmaking service for borrowers and lenders. Instead of going through traditional financial institutions like banks, borrowers turn to online platforms to request loans. And who fills the role of the lender? That's where you come in. So what's in it for you as a lender? Well, for starters, higher returns compared to what you might get from parking your money in a savings account. By cutting out the middleman, as known as the banks, P2P lending platforms are able to offer attractive interest rates, giving you the chance to earn a tidy profit on your investment. But as with any investment opportunity, there are risks involved. One of the biggest concerns in the world of P2P lending is the possibility of borrower default. Just because someone wants a loan doesn't mean they'll pay it back. And if that happens, well, you could be out of luck. So how do you mitigate this risk? Diversification is key. Instead of putting all your money into one loan, spread it out across multiple loans. That way, if one borrower misses a payment or defaults, it won't sink your entire investment ship. Think of it as building a sturdy financial portfolio, one brick at a time. But don't just take my word for it, do your homework. Before you start lending your hard-earned cash to strangers on the internet, take the time to research potential borrowers, check their credit rating, assess their risk level, and make an informed decision. After all, knowledge is power. Now let's talk about platforms. There's no shortage of P2P lending platforms out there, each with its own set of features and benefits. From industry giants like Lending Club and Prosper to niche players catering to specific borrower demographics, the options are endless. But not all platforms are created equal, so be sure to do your due diligence before signing on the dotted line. And lastly, stay vigilant. The world of P2P lending is constantly evolving, with new regulations and market trends shaping the landscape. Keep an eye on platform policies, stay updated on any changes, and be prepared to adapt your strategy accordingly. Remember, flexibility is the name of the game. So it's a bold new frontier in finance, offering both opportunities and challenges for savvy investors like yourself. With a little caution, a dash of research, and a healthy appetite for risk, you can navigate this exciting world with confidence. And there you have it, guys. 7 powerful assets to grow your wealth outside banks. Whether you're drawn to the glimmer of precious metals, the solidity of government bonds, or the allure of cryptocurrencies, there's something for everyone in the world of alternative investments. So, which path will you choose? Let us know in the comments below. Remember, the purpose of this video is to broaden your horizons in the realm of investing. It's not about handing you a ready-to-eat financial meal, but about teaching you how to cook one yourself. Investing comes with its share of risks and uncertainties, so it's crucial to wear your research hat and consult with qualified professionals before making any financial decisions. Keep in mind, past performance in investments is like last year's weather forecast. It doesn't necessarily predict what's going to happen tomorrow. Always weigh the risks and tread carefully when putting your hard-earned money at stake. Now, if you found this video helpful, I highly recommend watching my next video, which is the perfect complement to this one. Thank you for joining us today. And don't forget, like, share, and subscribe to our channel. Your engagement is like applause for our efforts, and it motivates us to bring even more valuable content your way. So feel free to drop a comment below. I appreciate your support, and I'll see you in my next video.